Welcome to Morningstar. Tencent has swung back to revenue growth, which could improve investor sentiment and perhaps even the broader Chinese equity market. The question, though, is whether this growth is sustainable. Ivan Su covers this stock, and he's here with us today to tell us what he thinks. Hi, Ivan. Were you surprised by the results of Tencent? And what was the biggest surprise? And do you think the growth is sustainable?
Hey, Kate, I think the biggest surprise coming out of the latest earnings is really how fast Tencent managed to grow its advertising revenue, despite operating under a very challenging environment in the fourth quarter where you had COVID policy that was still in place. Now, we believe the strong revenue growth, which was 15% in the fourth quarter, is sustainable over the next couple of quarters because the revenue growth we saw mainly coming from rising number of ads that were displayed on Tencent's property. And if you compare what Tencent's ad load is to other peers, they're still running at very, very low levels compared to the likes of TikTok, for example. So there remains a lot of opportunity for Tencent to increase its frequency of ad display on its platforms, which should serve as a sustainable growth driver going forward.
Right. So in the latest earnings, management has said that the firm is set to pivot from cost cutting to fostering growth. In what segments would it be?
Yes. So the turning on of these growth engines will be very broad-based in our opinion. Take games as an example. You have increasing number of game license approval. So that's going to translate to more games released onto the market, which in turn translate to more gaming revenue. Take advertising as another example. You have Tencent's video accounts that's growing at a very fast rate, and that's looking to continue, which will benefit ad revenue. And lastly, which is also a very interesting point that management mentioned, was how they're seeing opportunities for fintech revenue to grow. So I think that will come in form of them selling more insurance products and also wealth management products on its WeChat Pay platform.
Since you brought up growth, should investors still be concerned about regulatory pushback?
Yeah, so we maintain our view that the peak of negative regulatory announcements are already behind us. The internet companies that we talk to on a regular basis have all said that they've not been subject to new regulatory investigation over the past few quarters. And we think that clearly points to a moderating regulatory environment and normalizing regulatory landscape for internet companies. So we aren't concerned about additional regulatory pushback, at least over the near to medium term.
So lastly, with a share price hovering at this level, what do you think is the overhang, and do you see each of them changing over the near term?
Yes, there are remaining overhangs, and it takes time for investor confidence to restore. And we're talking about things such as whether companies can sustain revenue growth, whether the Chinese economy can sustain its growth, and also whether we're going to see a continued stabilization in the overall political environment. So I think until these factors restore to a more normalized level, then is when we're going to see a lot of these overhang eventually removed.
Thank you so much, Ivan. For Morningstar, I'm Caitlin.